Let's jump right into markets now. I was joined this week by Central Valley Ag's Luke Beckman to talk prices and some things happening overseas. But we began by getting a look at the December WASDE report.
Yeah, the market a shade disappointed today. Troy just did not see ending stocks tighten up, as much as it had hoped. No changes in the corn balance sheet domestically. Trimmed, Argentine production a bit to acknowledge the dry weather there. But yeah, really the USDA hitting the copy and paste function today, really electing to wait until we see additional information, in the January reports, that being final production. We've got a stocks report as of December 1st. Those are always interesting. So I think we chop sideways, in the corn market as we just wait for more information. And it's really back to focusing on South American weather for both commodities. Beans today, the USDA did acknowledge, higher crush demand. We've just had a record pace. We set a new record every month for the month with crush. So the demand items are still very robust, but the USDA has done a fair job of acknowledging that in prior months. So no surprises today as we wait more information in January.
And you touched on it already, but give us a quick check on South America too.
Certainly the growing season, every day is the market's watching the weather forecast and how that changes. It's been well documented that the subsoil is certainly dry. They went through what would be our fall on a rather dry stretch. And so the market's certainly watching weather forecasts and as they change. As far as planting pace goes, we did see acreage increase in South America this year. They had strong price signals, through the summer and with how their currency trades versus the US dollar. That those producers really had a nice incentive to go out and make sure that they planted those acres, and they did that. So really it just comes down to Mother Nature, and the market is certainly watching that. Had some beneficial rains in the last week, which have kind of cooled the market down a little bit as we watch the weather forecast week to week. So really, Troy, it just comes down to weather and how this crop finishes up and how yields start to come off when the Brazilian harvest starts in late January.
Luke, there's been a lot in the news the last few weeks about a COVID vaccine. Maybe no market is as happy about that as ethanol because with COVID less of a concern, people might get back out on the roads, go back to work, and just go out more in general. Assuming everything goes as planned with the vaccine, what's your ethanol outlook for 2021?
Yeah, it's kind of the one bearish piece to the corn market right now is certainly what's going on with gasoline demand. We're running 10% below year-ago levels on gasoline demand, which is certainly holding ethanol down a little bit. USDA, again, has acknowledged that with a lower ethanol demand estimate for their 2021 balance sheet. But as we look forward, certainly the broader economy has been encouraged by the vaccine news, really believes that that's a sign of progress, and we're setting ourselves up for a good year in 2021. As it relates to ethanol, I certainly think that's part of that story. One thing I do believe is a change for ethanol long-term is that COVID's really forced the broader economy to change in a way that I believe is going to be fairly permanent. What I mean by that is, you have people working from home. There's going to be less commuting going on as people are more apt to work by utilizing technology and not actually going to a brick and mortar, office building to work. So miles driven by the U.S. Consumer and really worldwide, I believe has hit its peak. And I think permanently for ethanol, that just suggests that, ethanol demand has probably also seen its peak. So I believe ethanol obviously has a better year than it did a year ago. But as we look long-term, ethanol really gets viewed as a transition as we kind of move towards electric vehicles. And that certainly is a conversation that involves the new administration as well.
With the way that everything has been after harvest, does that change how co-ops do business or the advice you provide to customers? Basically, has 2020 been a learning experience for CVA as well?
No doubt. It's been an opportunity to learn. Every marketing year is different. This one's been especially different just with the timing of how markets have rallied. There's been no seasonality to how the markets have behaved this year. Really with the rally coming late and coming at harvest, the best prices we saw were at harvest. So that can happen. I mean, 2 out of every 8 years, we see the possibility of corn and soybeans to behave in counter-seasonal fashion, and this was one of those years. But as far as it relates to, rural Nebraska, rural Iowa, Kansas, export program being up significantly has really been an opportunity for shuttle loaders throughout the Midwest to see additional volume through those facilities. So at the co-op level, we've certainly seen that, we've felt that, a lot more bushels being pushed through those assets, and that's a good thing, for the Nebraska farmer. We're exporting a lot more grain outside of our state's borders, which is positive from a price standpoint. And that really comes at a key time because ethanol has been struggling, as many people know, just from a margin standpoint and just overall demand. And what that translates to for the producer is just what's the cash price, what's the basis in your area. Producers have probably seen that it's been fairly typical. And with ethanol really not going at full tilt, it's really the export programs that have been able to keep corn moving from the producer to further down the supply chain. And export facilities and shuttle loading facilities that are in the co-ops network really allow us to do that.